Hey there, and welcome to the homeowner's policy video as a part of the Make Insurance Simple. This is the fourth video, the second kind of substance video in the middle of our 6-video series, and we're going to hit on homeowners policy coverage and how that works today. So what you'll learn, we're ready for the second of the two main courses. Like I said, we're going to hit the homeowners policy coverage, how coverage works for your home, protecting your home and your stuff. Let's go back though, a quick review. We started off with the basic parts of an insurance policy, and we talked a little bit about what coverage limits were. That's way back when we knew so little about our insurance coverage. If you think back on that, it's kind of amazing how far we've come to this point, isn't it? And then after that, we set the foundation. We talked a little bit about property versus liability coverage. And since then, we've been talking about property coverage and liability coverage for the most part. And then the last videos we did, your auto insurance policy, and we actually broke that one up into 3 different parts. It started with at fault versus no fault states, and then depending on what you wanted to study, you went into either the at fault video or the no fault video. And now we're ready to move on to the next part. Of course, I strongly suggest that you dig up your actual home and auto policies and have them in front of you right now. Obviously, we're talking about homeowners coverage in this video, and so if you have your homeowners policy in front of you, specifically the deck pages, it's really going to help you out as you hear all these different coverages and try and figure out what you have, what you don't have, what you might want to talk about adding or maybe subtracting from your insurance policy. So have that policy out in front of you. Quick disclaimer. Got to say it again. This course is meant to provide a very general advice. I'm in no way confirming details about your specific insurance policy. Those conversations should happen between you and your insurance advisor. If you don't already know that, I'm just going to throw it into this video as well. All right, let's get going now. Super fun fact. I've experienced this one myself. And in the 1800s, homeowners insurance, it kind of got going during that time in America. And at that point, it was only for fires. So if you didn't have a fire insurance policy, the fire department wouldn't help if you had a fire. And so I was in Washington, D.C. a couple years ago, and we went to Alexandria, Virginia. And if you've never been there, just the cutest little quaint cobblestone streeted town, and these little brownstone houses all one next to the other. And if you look, they still have this kind of metal symbol on the frame of the door, and some have it and some don't have it. And I was going up and looking at it, trying to figure out what this was, and realized that this was the plaque that said whether you had insurance for your home or not. And so when a fire happened, the fire department would look and see, or the people would look and see that plaque, and if the plaque was there, the department would show up, they'd get their hoses out, they'd try and put the fire out as quickly as they could. If the plaque wasn't there, then it was up to the homeowner and neighbors and all that kind of stuff to put the fire out themselves. So homeowners insurance was really started at the very beginning of having fire departments and those kinds of groups of people to help you solve problems in your home. And fire departments were based on whether you had insurance for your home or not. So that's a pretty cool fun fact that I enjoyed exploring in Alexandria, Virginia a couple years ago. Okay, let's get right into it. So home property coverage starts with your dwelling coverage. And your dwelling coverage is simply coverage for your house itself. It's coverage for the structure of your house itself. And people get confused about how this number is set up all the time. So if you're looking at your homeowner's declarations pages right now, the first thing you see is dwelling, and then you're going to see a number there. And that value looks like maybe about how much you bought your house for. And so people are thinking, okay, this is the appraised value of my house, or the cost, the market value of my house. And this coverage has nothing to do with the market value of your home. What it does have to do with, it's all about what the insurance company feels it would cost to completely rebuild your house. So it doesn't have to do with what you could sell it for. It has to do with what the brick and mortar is going to be, hiring a contractor, putting in the frame, the wood, the drywall, the kitchen, all that kind of stuff. And we figure that out by using a replacement cost estimator. And that's why it's called replacement cost, because it's the cost of replacing your entire home. And your dwelling coverage should reflect the cost of replacing your entire home. Now, we obviously don't know exactly what it would cost to replace your entire home, so we're going to create an estimate. Like I said, a replacement cost estimator is what we use to create an estimate for what it would cost to replace your home. So that is where your dwelling coverage comes from. Dwelling coverage to replace the actual structure of your home. The second coverage that you have of the 4 different kinds of coverage that are the basic coverage on your home property coverage are other structures. And so this is the coverage limit for other things that aren't attached to your house. So other structures on your property that aren't attached to your house are covered under other structures. And, so this could be some pools, it could be a barn or barns, small sheds, a detached garage. Your landscaping is often covered under other structures. Gazebos would be covered under other structures if you have a workshop, very similar to a detached garage there. Carports, any of those kinds of things would be considered other structures and would be covered under your other structures coverage limit. This coverage limit is generally figured by just taking the dwelling coverage and 10% of the dwelling coverage. So if your dwelling coverage was $210,000, then your other structures coverage is probably $21,000. If you only have a little shed or something like that, $21,000 is more than enough. But if you start getting a pool, a detached garage, those kinds of things, your other structures coverage could be low if your insurance agent hasn't raised the other structures coverage above the 10% that's commonly included in a homeowner's policy. So think about that if you have significant other structures. Okay, the third of the 4 coverages, the 4 property coverages on your homeowner's policy is personal property. This is your stuff. The coverage limit for your belongings and your stuff. So this is your dishes, your tables, your Barbies, your piano, your art stuff, your couch, your bed, your chairs, your bookshelves, your Vampire Diaries videos, and the whole book series that you have in the office, your iPad, the fridge, hockey pucks that you have in the garage, your stuffed animals, your lamps, your TV, your secretary, your clothes, your stuff. All the things you have inside your house, if something was to happen to your house, that all needs to be replaced. That's your personal property, and the coverage for that is right there on your deck pages, and it's generally between 50% and 75% of your dwelling coverage. So there's a number in there, and we go back to that $210,000 dwelling coverage house. So your personal property coverage would be set at, if it was 50%, $105,000, and somewhere in between that and 75% is generally where it's set at. Now, you should definitely think about your stuff, and most of the time, homeowners policies, if it's between 50 and 75%, will probably cover your belongings. But if you have a lot of nice things or a lot of expensive things, then talking to your insurance agent about raising your personal property coverage is definitely a good idea and something you should think about. The other thing you should think about when you're talking about personal property is what you know about your personal property. If you do nothing else to document what you have, walk through your house with a video camera and then save that video on the cloud, or take pictures of each room, because if something bad happens, an adjuster from the company is going to come and say, what did you have? And the better you can answer that question, the more money they're going to give you to replace your stuff. Insurance companies realize that you don't have a picture of every single thing that you have, and they're not going to say, well, if you don't remember you have it, we're not going to give you any money for it. I mean, there's some general things that they will pay out for, but the more you know about your stuff, the more money you will get in a claim. all the way up to that coverage limit. So definitely document the things you have as best you can so that you can have a better claim experience. Speaking of claim experiences, your policy should have replacement cost coverage, not ACV. So this is the first coverage thing that I'm talking about here. Replacement, and it's real simple. Here's how it works. If you have if your house burns down and we want to replace a table, your dining room table that was lost in the fire, if you have replacement cost coverage, and that dining room table is going to cost $1,000 to replace, the insurance company is going to give you $1,000. If you don't have replacement cost coverage, then you probably have a coverage called ACV. ACV is the lesser of the coverages. In that same example, your $1,000 dining room table, they'll say, well, but you had that dining room table for 15 years, so we're going to depreciate for the period of time that you had it. And that's going to take that $1,000 down to $600, and you'll have to figure out how to replace it with the $600 we give you. So ACV depreciates the value of your personal property, and that means you don't get as much money as you need to replace it. So definitely check out your policy, see if it says replacement cost on it. Replacement cost personal property is usually the line you'll see on your deck pages, and that's an important thing to have. Okay, and finally, the fourth of the homeowner's property coverages, the standard property coverage, that's simply called loss of use, or additional living expenses is another term that sometimes you'll see on declarations pages. And this is simply the coverage for the cost of living somewhere else while your home is repaired. I've got a claim going on right now. The hot water heater kind of exploded. I mean, it wasn't a huge major deal, but it certainly like flooded out the whole main floor of these folks' house. And so they had to move out of the house and live somewhere else for about 2 weeks while contractors were in pulling out all the water damage stuff and putting in new flooring to replace what was damaged. They lived in a hotel. They had they have 2 kids, and they're living there right now. And we're paying for that. The insurance company pays for that as part of the loss of use or additional living expenses coverage, and that can be paid for if you have a total loss up to a year, whatever amount of time is a reasonable amount of time for it to take for the damage to be fixed is the amount of time that most companies will pay for your living expenses to live somewhere else. So that's loss of use coverage. And so those were the 4 basics of the homeowner's property coverage: the dwelling coverage, coverage for your house itself, other structures coverage, structures besides your house, includes pools, detached garages, all that kind of stuff, personal property, which is your stuff, and loss of use, which is your home away from home, making sure you have somewhere to stay, and we're going to take care of the cost of that. Let's talk about what is covered. What's covered? This is maybe one of the most interesting parts of this video, and one of the things you may not, have a real grasp on, and I'm going to make it real easy for you. I'm going to give you 2 terms right now that will carry us through this conversation. The first one is perils. Perils are bad things that can happen to your home and property, something bad that happens. So a tornado is an example of a peril. A fire is an example of a peril. And then an occurrence, which is a period of time during which a peril happens. So if a tornado came through and was to damage your home on October 13th between the time of 12:10 and 12:15, then that would be the occurrence, and the peril would be tornado. So you have those 2 things, and when insurance companies look at something bad that happens and whether it is covered on your insurance policy, they're going to use those 2 things as how they figure it out. What was the peril? What bad thing happened that caused the damage? And when did it occur? When did it happen? So those 2 things. There are 3 different kinds of policies that cover your home, and they all have different structures of what perils are covered. The first one is called basic. The second one is called broad. And the third, the best and the one you always want to try and have, is called special. So the special one is the one you want. Let's talk about the coverage options that are in those. The basic covers 11 named perils. I'm not going to go through those 11 things right now. You can, look them up on the web or look in our bonus section, and I have a great little PDF for you that describes the different perils that are on each of these kinds of policies. But 11 named perils. Fire is on there, tornado is on there, lightning is on there. Some of the most common perils are on there, but if it's not one of those 11 things when something bad happens, it is not covered by your policy. Broad expands that a little bit to 16 named perils. And again, you can check that PDF out to see exactly what those are. The biggest difference between the basic and the broad is coverage for burst pipes. So if you have a basic policy, you live somewhere that freezes during the winters, and your pipes freeze, and then when they thaw, they pour water into your home. Basic policy doesn't cover that. Broad policy does cover that. So one of those added 5 perils is burst pipes. And then finally, like I said, special coverage is the best one. And this flips the description of how the policy responds. It says simply, if it's not excluded, it's covered. So we don't have named perils. There's no named perils in a special coverage policy. What it says is if it's an occurrence, if it's a bad thing that happened and it is not excluded, and there are plenty of exclusions in homeowners policies, but if it is not excluded, then it's covered. And this is great because, of course, it covers the 16 named perils that are on broad. I can tell you they're definitely not excluded there. But it covers if an elephant sits on your chair, or the wildest things you can come up with, it is covered as long as it is not excluded. The other nice thing that special coverage does is it puts the onus in a court case. It puts the proof on the insurance company instead of on you. So you're in a claim situation. The insurance company, hopefully insurance companies do what they're supposed to do. But in a case where an insurance company and you disagree and it ends up in court, the insurance company is going to have to prove that it wasn't covered. Whereas with basic and broad, you're going to have to prove that it was covered. So the onus, the burden of proof changes in a court case with special coverage as well. So that's just one more reason why having special coverage is super important. So those are the 3 different kinds of things that are covered and how they're set up. Is your policy basic? Is it broad? Is it special? Can you not tell? It's very hard to tell on a lot of declarations pages. And if you can't tell, then I would, make a note of it and make sure you talk to your insurance agent about what kind of policy you have. Okay, now let's talk about homeowners liability coverage. Whereas with auto liability, there were a lot of kind of details to it. Homeowners liability is pretty straightforward. There are 2 different kinds of coverage for homeowners liability. And the first one is just liability coverage. It's the basic liability coverage that you have on your policy. Generally, the coverage limits are between $100,000 and $1 million. I usually suggest $500,000 as a place to start with your homeowner's liability coverage. And again, this is coverage for if bad things happen to other people because of you, your home, or your animals, any of that kind of stuff. Bad things happening to other people, you end up in a lawsuit or major medical costs. Whatever coverage limit you choose is what you'll have available from the insurance company to pay for that situation. Now, homeowners policies have another kind of coverage that is also liability, and strangely, it has the same name as a coverage on, well, I guess I had more here. Covers bad things that happen to people because of you, your family, your animals. I already said that, both on and off your property. It's important to know, that golf ball example. You're out golfing, it hits in somebody's car, causes damage. Your homeowner's policy is going to pay out for that loss, so it extends out from your home for bad things that happen to other people because of you. Okay, now we're getting into the second kind of liability coverage that I was talking about a second ago. Unfortunately, it has the same name, medical payments, as one of the auto policy coverages that I talked about in the at-fault policy video, and it's totally different though, so please ignore the fact that these words are the same. It's kind of frustrating in that way. Medical payments in a home policy is a smaller amount of liability coverage, oftentimes $5,000 or $10,000, and it's much easier to access than the full liability coverage. So An example just happened recently where, kids were playing in one of my insured's backyard, and a kid jumped off the top of a playground, broke a bone, serious, some medical costs there, not super major, but definitely traumatic for the family. We hit the medical payments piece of their homeowner's policy, and we're able to pay that out very quickly, pay for the cost of what happened, and not have to get into any big litigation or lawsuit situations, anything like that. Medical payments are quick, easy. They avoid bigger stuff that's messier. So medical payments is nice to have in there, and it's a lower coverage limit for injuries to other people. All right. Let's talk about endorsements. That was the basics. There's, 4 different property coverages on your home policy, and those 2 different liability coverages. So that's pretty simple. But there's a whole bunch of endorsements. I'm not going to talk about all of them. I'm going to talk about 3 that I feel are the most important. If you want to get more details about that, you can obviously, or about the other types of endorsements, you can talk with your insurance agent or, look it up online. There's lots of endorsements. Here's a few that I think are important. We start with water and sewer backup. Depending on where you live and the way your home is structured, water and sewer backup may be more important for you. If you have a basement and that basement is furnished, so you've got your nice couch down there and carpet and a big old screen for, watching sports or whatever, you absolutely should have water and sewer backup coverage, and you want to have probably at least $10,000 of coverage. The coverage limit for water sewer backup is different than the rest of the policy. And this covers specifically for sump failure, but also for sewer and septic backup. So if the sewers were to back up, that's messy, nasty, disgusting situation. And your water sewer backup coverage is going to cover for that. If you don't have water sewer backup, then you have problems with coverage. You don't have coverage in those types of situations. So I would suggest talking about water sewer backup with your agent, especially if you have a basement that's furnished. The next one is earthquakes, natural floods, and brush fires. Now, depending on where you live, one of these 3 things is probably a factor in your world. Certainly if you live in California, you've got brush fire issues and earthquake issues. If you live in Florida, hurricanes can bring along natural floods very easily. So those are the types of things that are excluded on normal homeowners policies, and often then are able to be added back as endorsements. It really depends on where you live. In the places that have the highest occurrence of, for example, earthquakes, you oftentimes have to buy a completely separate earthquake policy. So it's not going to be added on as endorsement to your homeowner's policy. You would have to buy a completely different earthquake policy, usually from FEMA or something like that. The same goes for natural flood anywhere around the United States. You cannot buy natural flood insurance on your homeowner's policy. You have to purchase that from FEMA. And brush fire can be the same way. So those are 3 big things that are, the natural disasters that happen a lot in your areas will be excluded from your homeowner's policy, and maybe they can be added back, or maybe they have to be purchased completely separately. Yep, I already said that. So let's go to now special personal property. We're going to go back to where I broke down those 3 different kinds of coverage. We had basic, broad, and special, right? And for your dwelling, your house, the structure itself, your policy is going to say, basic would be what's called an HO1, broad is HO2, and special is HO3. So if you see HO3 on your policy, that means that your dwelling, the structure itself has special coverage, or any perils that happen that are not excluded are covered. But most of the time, even in HO3, your personal property is not that high of coverage. Your personal property is often broad coverage in that situation. You can endorse the policy to make sure that you have special personal property as well. I think it's incredibly important because of what I already described and how the coverage works. So special personal property is a great way to make sure when something bad happens, your stuff is protected as well as the structure of your house itself. All right, rookie mistake. The rookie mistake here, and I see these packages on all different companies have their different homeowners packages, and they're all different, and they all have all these nerdy details in them. But the fact is that most of those packages are worth what you pay for them. And so, they can be an extra $100 or something like that a year. And it's easy for you to say, oh, I don't even get what's in there. I don't understand any of it. I'm just going to have them take that off and save myself the $100. I think that's a rookie mistake. I think that you want to add the package in there. Usually your agent can supply what actual coverages are in there. And if you really want to dig into it, you can. A lot of times it has water backup. A lot of times it has special personal property. So you want to level up that package. So I would suggest just doing that and knowing that you've got better coverage and it's worth the cost. So the rookie mistake, not purchasing a policy with the leveled up package, and every company has some different name for what that package is. All right, I zoomed through it. We broke down your homeowner's policy, and I hope you enjoyed the descriptions there and all the different parts of it. I certainly enjoyed describing it for you. We learned the 4 basics of homeowner's property coverage: your dwelling coverage, which is coverage for your house itself to rebuild it if we had to; your other structures, which is all the other structures besides your house on your property; your personal property, which is simply your stuff; and loss of use or additional living expenses, which is home away from home. I then talked a little bit about what coverage is, using the 2 terms: perils, which is types of things that happen, and an occurrence, which is when a peril happens. And then talked about the 3 different coverage options that most homeowners policies have: basic, which covers 11 named perils; broad, 16 named perils; special, which is what you really want to have both on your house itself and on your personal property, which says anything is covered as long as it's an occurrence and it is not excluded. So it has to be something that happens specifically, not excluded on the policy. It would have coverage. So that's the best type of coverage option. And then we talked about the 2 different homeowners liability coverages, which is your regular liability coverage when you, your family, or your animals cause bad things on or off of your property to happen. And then finally, medical payments, which is just a smaller amount for injuries to others, real easy to access, pays out quickly, can deal with small situations a lot better than the more clunky liability coverage tends to work. So medical payments is on your side there, helping you take care of liability situations that aren't big ones. And finally, we learned some common endorsements. There are tons of endorsements that you can add onto your home policy. I talked about 3 that I think are the most important: water backup, which is septic, sewer, and sump. Protects you from either any of those things backing up or not working. Flood, earthquake, or brush fire, which may not be able to be added back onto your policy. Here in Indiana, we can add earthquake back onto our homeowner's policy, but it's excluded to start with. We can't add flood because no one can add flood because it's a FEMA thing. What can you do? Can you add it back? Do you have to purchase it separately? If you have to purchase it separately, it's good to get a quote at least and find out how much it would be to protect yourself from those specific perils. And finally, special personal property. I pointed out that even when policies have special coverage for your dwelling, they often have the slightly lower broad coverage for your personal property. This pops the coverage up to special for both your dwelling and your personal property. Okay, what is next? Well, the main courses are complete. We finished our second here, the homeowners policy of the main courses, and we're in the home stretch, the final hurrah. We are ready for dessert, and I think you're going to enjoy the dessert. In the next video, we'll get familiar with an incredibly important coverage, especially for those worst case scenarios, and that is your personal umbrella. If you have one right now, this will help you to understand it. If you don't have one right now, this will help you to understand whether or not it's something that you want. So I encourage you, after you take a deep breath here, maybe go get a drink or whatnot, head into that personal umbrella video. And as always, the last step in this video is to head over to the Make Insurance Simple Facebook group and get engaged. Engage in the process. Share what you learned here. Man, I blew through a bunch of information. What's spinning in your head? What did I miss that you were wondering about before this video and hoped that I would talk about and I simply didn't? Put that question out to the Facebook group, and we're going to get that question answered for you, and other people will share if they have those questions as well. So head on over to that Make Insurance Simple Facebook group, get engaged, and you'll be glad that you did. Okay, hope you enjoyed this video. We will see you in the personal umbrella coverage video. Can't wait.